Hey, welcome back to the Hub channel. My name is Brandon, and we have our market review with Rob Roy coming up here right now. Obviously, we had the jobs report numbers come out this morning. Better than expected. We're going to wait to hear what Rob has to say about this. Meta coming out big. Amazon coming out big. Oh my gosh, Rob, get on in here. If you guys don't know Rob Roy, he is our EWO senior strategist. He knows what he's talking about. We do these market reviews every single week, but this week is a little bit of a doozy because there's stuff happening right now in the market that I just want to get your opinion on, Rob. Obviously, Meta coming out and absolutely crushing earnings and announcing a dividend, something that I think Silicon Valley is not really used to. So a little bit surprised to the upside here. What are your thoughts on what's going on in the market right now, Rob? What are you seeing and what's going to happen over the next little bit?
First of all, happy Friday to you, Brandon, and thanks for having me here. Good to be here on the Hub Financial channel. And yeah, that was a bit of a surprise, the dividend. And, you know, we had gotten off to kind of a little bit of a shaky start with the big tech earnings. And then Amazon and Meta, as you said, just came out and crushed it last night. And it's pulling the S&P with it. So you can see the chart here of the SPY moving up. And, you know, the question was, are we just going to fill this little gap right here and then that'll be it? Well, at this point, it doesn't seem to be, because right now, and, you know, there's still 2 hours before the market closes, but it looks like the market's just continuing to move higher. So pretty interesting stuff there. We're not too far away from the 10-day moving average. We're moving in the 45-degree angle. This is what you want if you're bullish on the market. That's the kind of mode that you want. You don't want to see those vertical moves, just this nice 45-degree angle move. And when you get corrections, they're not that severe. And so off we go to the upside. Pretty interesting to see the S&P react as well as it has today. Obviously, we knew it was going to be a big update for the Qs and the NASDAQ, but to see the S&P powering through. And, you know, last night the futures were up. There was questions on whether we were going to have a gap up, but then futures came down a bit. And so no gap today, just filled the gap from over here on the 30th of January and powering higher. So pretty impressive. You did mention the jobs report, and that's another reason that I feel like it's kind of odd that we're moving like this. We'll talk about Chairman Powell's comments on the Fed in a few minutes, I'm sure, but the jobs report for the government's number now, you know, the non-farm payrolls number, and the ADP report that comes out midweek, and then the government report are often at odds with each other. They rarely agree. The ADP report was nowhere near as strong as this non-farm payrolls report from the government is, but it's basically twice what was expected. So you would think, you know, if it's that hot of a number, and the Fed has been saying that, you know, they want the job market to cool a little bit. They still want good employment, but they want it to cool off a little bit. Doesn't look like that's what's going on. And yet here we are to the upside. So your guess is as good as mine on this, Brandon. And, you know, that's one of the reasons that I don't pay as much attention to fundamentals and more on the charts. You got to trade with the charts are giving you.
Yeah, I mean, you bring up something very interesting. Double what they expect. How could they be so far off, first off? I mean, I think this number will be revised down over time, but it doesn't matter. I mean, the proof, they came out with the number, and, you know, the market is reacting the way it is. And it's interesting because you would think the market would react a different way, but you still got to follow the crowd. You got to follow what everybody else is doing, because the market's never wrong. The market is psychology 101, and then you just got to follow the market, I guess. So you mentioned, what's that?
Sorry, I just wanted to tail on that before we move on. Is the comment you made is so important for the average retail trader to focus on, because it was a mistake I made when I first started trading. The market's never wrong. And when I first started trading, you know, you learn some things, you start trading. And then the more you learn, the more you think you know. And then you kind of move into this area of trading based on where you think the market should go, based on the knowledge and education you've acquired. And that's a mistake, because oftentimes the market does things that don't make a lot of common sense and kind of defy things that are going on. Today's a perfect example of that. You would have thought today would be perhaps a down day. with the jobs report being so strong, at least if you believe what the Fed said, and yet the market's going higher. So I think your comment is so important to emphasize to traders that you got to trade. The market's not wrong. The market's never wrong. You got to trade by what the market's giving you, not what you think. And I learned that the hard way myself years ago.
Yeah,
Anyway,
it's
sorry,
an
I didn't mean
ego
to interrupt.
buster. No, no,
I
I
didn't
mean,
mean to
it's good that
interrupt
you
you.
mentioned that.
I didn't mean to
No,
interrupt you, but I just felt like that comment was so
yeah,
important to emphasize.
yeah. No, I think it's an important lesson. It's an ego buster for sure. I mean, you have to submit to the market and then just play the market because at the end of the day, you're wrong if you think differently than the market. So,
Yeah,
and your
yeah,
money's gonna, and it's gonna be painful for your pocketbook as well in your
yeah,
trading. But
100%.
Powell talked.
100%.
Obviously, we saw the pullback when earlier this week when they said they're not gonna go ahead and cut interest rates, even though we knew that's what he was going to say. So this frustrates me every time this happens, but it's like they have to hear it out of the horse's mouth before they start to react. And what are your thoughts on this? Now that we do have the jobs report, where do you see the market going through March? Where do you see this? What's happening here, and what are you going to do?
Yeah, and you and I talked about that last week, and I do feel like the comments from the Fed and Chairman Powell was exactly what we expected. I didn't think he was going to be dovish. I don't think that March rate cut's going to happen. He kind of intimated that it's not very likely, and then he made a comment of, "Yeah, we're probably going to cut rates sometime this year." And whoa, that was a big downward move. It's always wild to watch the intraday charts when the Fed's talking, especially when after the announcement during the press conference, because depending on the questions, the market reacts real quickly to that. But no reason to be overly hawkish either. And that's where we thought maybe this was leaning a little hawkish by having such a strong jobs number, but the market's not taking it that way. But I thought Powell's comments were exactly what we expected, exactly what you and I talked about last week. He's going to be somewhere in the middle. And it was kind of a victory lap for the Fed, patting themselves on the back. Still not sure, that we're not going to see some weaker data and maybe more recessionary signs in the next quarter. But at least for now, I think the Fed's pretty happy with themselves, and we'll see if that plays out. I'm not convinced they've threaded the needle and they got this perfect. But as far as this week, and that's what we're talking about, there was no surprise to what the Fed said. So why the market went down, I agree with you. It was ridiculous. There was nothing, or shouldn't have been anything unexpected out of that meeting. And then we turn around, as the market often does. Whatever happens on Fed Day gets retraced the next day. And so that's what happened on Thursday. And then we're following through with it today. And that's really where things are. It's just, let's look
Yeah,
at the chart to show you what's really interesting here. We had these down days. So the market did take, at least the bond market, that the Fed's comments were slightly on the dovish side because look, boom, boom, big down days on interest rates. And it looked like, they heard something other than what Powell said, and that the rate cuts are coming sooner rather than later. And then we get the strong jobs report, and look at that bounce that we're having today in interest rates, and yet the market's up. So, yeah, the correlations that you think and you think you would expect, if you're just watching interest rates today, you think we'd be having a pretty good down day in the market. So, once again, goes back to your comment that you have to trade what the market is showing you, not what you think should happen based on the news that comes out. But pretty interesting stuff. Look at that. We closed both those gaps on the way down in rates on the 10-year, at least on the TNX, just today. Crazy. Wild
yeah,
movements
that's
in the bond
crazy.
market. Yeah.
I know it's crazy times, really. I mean, and then also to add to that, I mean, we're reaching new levels here on the S&P and other things. So it's like we're in territory we've never really been before, but you just got to stay on the edge of your seat to kind of watch this, I guess. But Let's take a couple of charts from the chat here. We did have a couple of questions about AMD. If you want to take a look at that chart and maybe go through that and see, looks like we got a green Heiken-Ashi candle that Jeff was looking for earlier this week when we talked about it a little bit. So what are you thinking about that?
Yeah, and I hated this vertical move in AMD. We had an alert on it over at the LA Wave Options EvoTrader.com. Got out just a little bit early because it continued to go up. But people that have watched any time I've been talking know that I don't like the vertical move stuff to the upside. We came back down. What goes vertically up often comes vertically back down. But look, it caught itself, Brandon. And now we're moving back up today again on a day when rates are up. And so I would have wanted to see, I was actually looking for more of a retracement of a lot of that vertical move. And I've been watching AMD and I'd like to get into it again, but it didn't correct far enough for me. But gosh, it gapped up today. And if it can break above that 180 level, you can see that this wave 5 in the HUBB software, programmed exactly to the Elliott wave algorithm. For those of you that may not be familiar, Elliott wrote an algorithm. There's other Elliott wave softwares out there, but most of them have some personal adaptations into it. This one from HUBB Financial is programmed exactly to the algorithm. And long story short here, it's looking for AMD to reach the 200 level. And based on the movement today, I'm not going to doubt it. But if you're not in it now, if you're in it, obviously you'd stay in it and you'd be happy that it didn't correct more. If you're looking for an entry on AMD, we're not going to get the one that I wanted down here. So the next would be a break above 180. And then I think you're long up to 200.
I like that read, Rob. What about, we had another question here, just to bounce over here on Google. One of the, one of those stocks,
The Google, I love Google. Again, well, it's, this was the rough start to earnings season, right?
Yeah, that's the antithesis, the exact opposite, kind of what we thought was going to be coming with the rest of them. But man,
right. Yeah, until Amazon and Meta said, not so fast. Yeah, watch this. We had and this is one where we also had a trade on Google, kind of timed the exit pretty well on that one because of this big move to the downside. Now it's trying to bounce today off support, and Google needs to hold 140. I drew the support line there. If we hold into the close where we are now, it's going to be a bit of a doji. So perhaps that's a chance to try to get back in. It's not currently in a 5-wave pattern, but you can see all these zigzags that are here. And so, when you take a look at possible entries, this is one that you could take a shot at. We broke above the 100% level. And for those of you not familiar with how zigzags work, usually when you hit the extension, which the 100% extension was the target, but sometimes they go to the extended level, which is 161.8. But normally, before it does that, it comes down and tests the previous fib level. And that's what's going on today in Google. So you could keep an eye on this. And if we start to bounce off this 140 level, then I think Google may right the ship and head up towards 160. But you got to watch the 140 level first, especially if we do close with a doji today, and see if that means we're bouncing on Monday or are we breaking back below it. So I don't think I'd do anything today, but I would have a really close eye on Google on Monday to see what happens. And I think that this is what I thought was going to happen with AMD, Brandon. See how vertically it went, and then boom, all of it was retraced. That's exactly what I thought we were going to see in AMD, and we didn't. So you have to look at each chart on its own merits and trade based on those. If you have your favorite stocks, which a lot of people do, and I know a lot of people are really into AMD right now, and they are just crushing Intel. I mean, they were always the stepchild to Intel. Not anymore. They're big brother now. And I just kind of thought we would see something like this on AMD. We didn't. But again, just to get back to Google, watch 140 on Monday. I would sit on my hands today, but see what happens on Monday.
Well, I
The
mean,
other
just to
thing,
wrap up. Oh, go ahead.
I'm sorry. The other thing here that I do want to make note of is with Elliott wave corrective triangles, and you can see we had such a nice um, ascending triangle here. You measure the mouth of the triangle, and that's the move that's expected. And based on the mouth of this triangle, the target price was 155, which is exactly where Google went. In fact, the high here was 155.20. So it hits the target for this Elliott wave corrective triangle breakout spot on. And then what normally happens is once the breakout occurs, it retraces back to the point of the breakout, which is exactly where we are today. So it's just Google is one of those stocks that just the Elliott wave rules just seem to constantly work. And I always love it when Google shows up on my searches and I'm going to put some sort of a trade on it. But it could not be more exact to the rules of these Elliott wave triangles with what's going on today on Google. Sorry, I just wanted to finish that thought.
Yeah, to wrap a nice little bow around that, I feel like Google's AI narrative has struggled and it's actually pushed the stock down where all these others are competing in a space where they're pushing forward with their AI narratives. I mean, I think you saw that a little bit with Amazon and Meta pulling ahead and absolutely switching a 180 this week on earnings, and it's shocking to see. And I can't help but wonder if Google has been holding back to release something huge, and once that happens, I think you may see a run catch up for Google to these other plays here. So I don't know. We'll kind of have to see how that
Well,
plays out.
yeah, I couldn't agree with you more. And I do think Google has their act together and they know what they're doing. And that's why I'm saying watch that 140 level. If we can bounce off of it on Monday, I'm with you. I think they play a little catch up. And
Yeah.
based on these moves, there's Amazon and Meta, how those charts look the same, both big gaps. There's no way I'm chasing either one of those after these kind of moves. But watching Google, if we bounce off 140 Monday, then yeah, I think that's where your trade is. So agree with you 100%.
Oh man, I couldn't agree more. I like that play. So here's what we're gonna do, Rob. I think that's everything from that I wanted to hit today. Was there anything else that you wanted to cover before we wrap this up? This has been great.
Yeah, and just one final comment on from you. I can't let you go each week without a crypto comment, and so I was just wondering. I got the chart of Bitcoin here. It held 40,000, which it needed to do. It's just kind of stabilized underneath 44, 43,000. Ethereum, we had talked about last week that could be a potential catch-up trade. It's also holding where it needed to. So they both seem to be holding important levels. Any thoughts in the crypto world from you, or
It's
just kind of status
interesting.
quo?
No, you bring that up. I mean, we were looking for a pullback of about 30%. I think we only got about a 21% pullback on Bitcoin. And when we'd watched that, it was interesting because after those bounces, they do build up steam and push back up to the high side. I mean, you have that drawn perfectly where it could go up into the 50,000 range easily here now, even after that pullback. But the only thing that's different this time is just like I said, it didn't pull back that 30%. We were looking for 38,000, 30. I mean, and you could argue it hit 38.5, but we were hoping for like 37,000 Bitcoin. It didn't hit it this time, but that could also be because big money's now at play here, and we're not going to be see as big of volume swings as big as volatile swings in one direction or another. As you know, Grayscale's selling has subsided for the first time
That's what I
ever.
was going to ask
BlackRock,
you. Yeah, that's
yeah,
exactly
they,
what I was going to ask you if that stuff is over, because you mentioned that last week, which was like,
yeah.
oh, if the light came on for me, as I mentioned, I was thinking that was already done, and when you were saying that was still going on, yeah, that was eye opening for me. So if that's done, then gosh, look at this chart of Bitcoin, Brandon. If it can break above 44,000, and there you go, you're off to the races towards that 50 target. So.
Yeah, it looks really good there. And BlackRock has now outpaced Grayscale's sell-off in a single day, which they've never done that before. So big money could be coming into this as we go forward. I think we need to keep watching this one, Rob.
Yeah, super interesting. Thanks. I appreciate the comments. I always look forward to your crypto wisdom.
Well, thank you, Rob. I always love meeting with you, going over the market for the week. You have so much insight, and your chart reads are valuable as always. If you guys haven't subscribed to the channel, please do so. Go ahead and hit that like button as well on this video, and we will see you next week back here on the channel at the same time, same place. We'll see you later.
Sounds great. Take care, Brandon.
Yep.